Yes, sir. Yes, sir. Yes, sir. It is 1 p.m., July 17th, 2024. It's your boy Doc here in New York City. It's 83 degrees, feels like 1,000. But we're not talking about the weather. We're talking about the stock market, right? How's everybody doing? We're going to have a little bit of a workshop today. We had a few requests to talk about how the 2-day VWAP works on a quant chart that is part of the quant trading app. We'll get into that. We're going to discuss where the SPY is right now and if there are any signals or data that can show us possibly a pop up to the VWAP or higher. And we're going to go through a couple indicators, right? So a little bit in store right there. I'm going to pop out the chat and I'm going to try and ferry in a couple people that are having a little bit of issues technically. See if we can get them on board. Chat should be open. If you're having problems typing anything, just make sure you hit the subscribe button. It's to weed out any type of spammers or anything. So let's see if we can get a couple more people in here. I know I'll drag this over. So the SPY had a bit of a tumble, which was expected, right? If we look back, we see a pop up, we hit a ceiling, we come down, we find support. We come up, we find a new ceiling, and then we come down, we find the same support. This is a key indicator, right? Indicator that this old resistance is now going to be pretty good support. We're going to leave that in our minds and think of where we could go from here, right? So the first theory is that this is support and that we could see a bounce off this, right? So how we get into that, we open up some other tools. So technical analysis is a passion of mine, right? I've been doing it for as long as I've been trading, and I rely on it. But to get some extra confluence on that, we open up other tools, other data points, right? This is a data point. We're seeing a support, we're seeing a resistance. That's data. Those are levels. And if we click on, let's say, quant chart here, and I have this zoomed in a little. There we go. This is a quant chart. This is quantitative proprietary theory for quant trading app. This is cold hard math. This isn't theory. This isn't a level that someone's eye saw. This is math, right? We're going to switch over to the SPY. And we're going to see levels that are based within the 2 sigma trading theory. 2 sigma is just where the most of the action happens. Outside of 2 sigma, it's about 8 to 9% of the action. When we get out of that zone, we kind of try to start thinking, okay, we might be going back in. NVDA, on the other hand, that was an anomaly that was driven by non-technical forces that was just blasting through 2 sigma. But for all intents and purposes, when we get around 2 sigma area, we kind of start wanting to start thinking about getting back into reality as my thing. Within that, we have the sell zone. This is another type of, okay, when we start getting this high, we kind of want to start thinking about it again. It's not a trade signal. It's not, okay, everything in to come downwards, but I tend to start thinking we could see a possible down move. So if we think of level to level trading, and I say this a lot, level to level, we hit one level, the buy zone, we come up to the sell zone, and then we come back to the buy zone. That's in a perfect reaction world, right? Within that, we get to play the levels. So instead of bouncing off of a level, we might break it, retest it for higher. So let's just back up. This is the 2-day VWAP, right? I'm not sure who's in the house right now, but the 2-day VWAP was a request to discuss. This is your regular VWAP line, right? Volume weighted average. But instead of using one session like this skinny little line, this is the 1-day VWAP. This is anchored for 2 sessions. And this is a daily, so this is 2 days we're looking at, right? This is yesterday's, and this is today. When the 2-day I believe the 2-day VWAP's a little more respected. But when we play a level, we want to look for a break and retest, right? So we broke it, we gapped over it, we came back, and we kind of it kind of let us know that, hey, I know I just broke the VWAP, we're coming back, and I'm going to let you know I see you, and I want to go higher. So I wouldn't consider this as it's not a textbook perfect bounce off, but this does have that feeling of a break and retest, right? Clear to see that, right? And then we followed up level to level. We come to the intraday level. This is an intraday north. This is an intraday south. That's just what I call it. That's just my lingo, easy to explain it. And when we broke that, look, we broke, retested to go higher. Now we broke the sell zone. There's no retest on the line here, but maybe you can consider this being a retest. This is all in the theory and along the strategy of break and retest, right? Break, retest, double test to go higher. So if you have if you could take away anything from today, if you take away the break and retest when you're playing levels, you're already in the game. Is that what makes sense? So anyway, welcome guys. We're going to be getting started up here. I think the technical time is 1:15. But thanks a lot for joining me. We're going to try it on YouTube today. Please hit like, subscribe, and hit the bell to get notified when we do this again. I want to start making this a regular thing, but as of right now, we kind of do this as time permits. So what do we see here? This is not telling me really much anything, right? I don't really consider the 2 sigma as a magnet as much as it is just a point, a mathematical point. So this would not make me believe that a 566 upwards here on the 10th would happen. Just wanted to show you this one level here. I mean, this one day here, just for that break and retest, right? Another good thing about QTA is you can go back and backtest pretty much everything up until like the last 4 years. I wouldn't go back before 2020 because the math kind of changes. But so you can see here, this will be a good level to level play, right? So as we're looking on today, we wanted to know if this had support. So this is a technical level, 556. We're going to actually probably make it 557, right? Close to that. So let's say, we'll leave it 556 for now. We want to look, when we open up that date, we want to look if there's any confluent level, right? This is my eye looking at this level. I see resistance, support, and support. I want to see if math backs that up. So we go back to our quant chart. We come up to a day that we want to use today. And when this loads, we're going to look at 556 to see if there's any confluent level there. Here you go, the intraday north, the south, right, where we talked about earlier, and the buy zone is right before it. Below it. So this is a confluent level, right? We look back. This is also support what we just saw on our technical chart. This, to me, tells me, all right, I'm more leaning now that this 556 from the tech chart is pretty strong because we have the confluent level of the intraday and the buy zone. And what did we say on the 10th? That good special example. It was from zone to zone. We saw a touch on the buy zone, then a touch on the sell zone. Now we can just transfer that to here. Touch on the buy, touch on the sell, back to the touch on the buy. What's next? We just assume, right, the trend is our friend until it's not. Is that the way we go? Right, sure. So we assume that if we bounce here, we can start traveling back up. We want to wait until we see a bounce, because if this fails, then we have a new story to tell, because we'll lose this support, and then we go back to our tech chart and see what's below that. Below that is 553. So it's just constantly like changing the filters on your camera. I want to look at it through this lens. I don't like that. I'll look at it through this lens. Okay, what about both lenses together? Do we find new information? Do we find too much information? These are all things that we find out as we look at them. So first, I like to establish the levels, right? We establish the levels using technical analysis and the quant method, using the quant charts here on QTA. Then, what I like to really do is then find if there's any sentiment in between that. Sentiment, I like to use the GEX levels, right? I'm going to pull it up here so it's ready to go when I drag it over. GEX levels, gamma exposure, when you look up the definitions, is just basically the amount to move the underlying 1 point. We want to know how to trade with it, right? GEX levels look like this. This is the GEX feed. This is available in the Discord for Quant Trading app. You look on the side here, there's a gamma exposure. We have the SPY, the SPX, the Qs, the Russell 2000s, the weeklies, and also the top 7 right here. Tesla, Apple, Amazon, Microsoft, NVDA, Meta, and Google weeklies. We'll get into that for a minute, but let's stick with the SPY. I'm on the SPY weekly. The SPY weekly is expiration for the upcoming Friday. That's the Friday's expiration. The 0 DTEs is just what it says. It's the daily expirations. It will show you those. We're going to start with the weekly and work backwards into it. So this is, let's see if it looks better blown up, or is it too blown up? Too blown up, right? We can make this work. 556 was that level, right? Look at this outlier right here. Right off the bat, I can see this 556 is an outlier. It's a positive GEX in the middle of a sea of negative, right? This doesn't really, You could say that this might be a magnet just because it's an outlier of liquidity, but I also like to look at this put spike. This is a put block. This is significant, right? It's right around 555, centralized, and it's taller than all the other ones. This, to me, will act like support, right? All these put volumes are going to be eating up the orders as they come into it, just like on level 2. If you notice like a large order at a certain strike on level 2, you'll notice that acts like a support, like a wall, right? Same way. So this, to me, is support. Now we just refresh our memory. We go back in the quant chart, and we see 555. Does that make sense? Right here, this is the buy zone. So this is all lining up. 555, 556 is looking like good support, right? And now we want to see, okay, we got the support, right? Check that off the box. We should probably write that down. Anyway, 1, we have support. And 2, we are at support. The current price action is right at support. So while we're explaining this, we can wait and see if this support holds or if 555 is going to be a better one. We can play around. We have time. And in fact, now that we have that, this makes a little more sense, right? 556 exactly, and then the 555 somewhere right here. And just for intents and kicks and giggles, we'll make a little one at 555 because we researched that. 1 penny is 1 penny difference. Is that okay? I think that's okay. So we're looking for a bounce off this. And now that we've looked at my other data, I can comfortably move. Remember earlier I was about to move this and I was like, you know what? Nah, let's just leave it. Now that we have the quantitative and the mathematical data and the GEX data to back it up, we have a more structured support. In fact, I'll make this one that green because that was the green outlier, right? So now when I look at this, I'm saying, okay, that's that green outlier I remember on the GEX chart. We don't have to go flipping back and forth. Do I like this color green? I like that. Green! We gotta see some greens, right? So, we have the support. Now, what do we want to know? All right, we have the support. Got it. What do we do with that? How do we trade that? We're at support. I can't trade into support, right? If you're a fast scalper, maybe you can. But what we want to know is there any sentiment? Is there a theory? Is there a trade plan to say that, oh, we can go higher from here? We can use that support to go higher. Since we're on the tech chart, let's start with the technicals, right? Let's start with the indicators. We have this RSI here. This is the valleys are rising. So this is telling us that it wants to see the price action go higher. The price action is lowering. So this is divergence. I'll have the charts. I have some examples of divergences. In fact, maybe... No, I'll pull it up later. But you have the price action, the valleys of the price action going down, and the valleys of the RSI going higher. That's divergence, right? This is letting us know that a pop is possible, or a move upward is possible. If you're really trading fast and you get into lower time frames, these can actually be misunderstood, and this could actually be the RSI resetting for another move downward. We'll have to see how the price action works at support. But as far as textbooks say, RSI going, the valley's going up, price action valley's going down, that is bullish divergence to the upside. Another quick look at the MACD. This is just in a grave. This came in a gutter and it's just lying there. Nothing's going on. It's fairly straight. It's not making new lows, but it's not really telling us any action. So this is like a non-data, right? If anything, I could assume, if I had to assume, which I hate doing, I would guess that we could see some upward movement because the MACD is kind of low. This is not giving me anything though, so I shouldn't get into that. The vortex indicator is also not really telling me much. The gold line being on top, which is the negative side, kind of is inkling that we are still in the bearish trend. But this makes sense because we're still not hitting that support yet. So I at least kind of check out that there is still some more room to go down on SPY. But what are we looking for? Sentiment for the upside, right? We go back to the GEX. I'll drag this over here. So now we have this big strong line of equity here at 562. We have the absolute GEX. Absolute GEX is a value that shows us where the high liquidity is without getting into the details of it, right? So we have absolute GEX at 560. We have a call volume spike also at 560. And this big magnet above 560 pulling in this direction. So we have a pull, and we're at, this is the last shot at 5:58. We're now a point down from that. Every 15 minutes, this is updated. So keep that in mind. Every 15 minutes, you get a new screenshot. If you wanted to get actual live footage, it's in the, on the quant charts here. We go under, no, options, sorry. Options, advanced gex. We click here, and then we can type in what we're looking for here. We have SPY already here. All these expirations on the side, these are this is every expiration that's available on the option chain for SPY. And this is the data that you get from it, right? It's a little drawn out because there's a lot. So what we can do is we can uncheck all, and we're going to select today, tomorrow, and Friday. This is every expiration from now till Friday, as opposed to the one we were just looking at, this is just Fridays. So now that we're incorporating all 3 of this week's expirations, we'll see if there's more data. This looks a little cleaner, right? This looks like a little more easier to understand. We have negative gex trailing off as we get further away, higher liquidity around where the price action is right now. But look, it's a nice road, nice easy path, no drop-offs, right? Like this would be a drop-off. This price action to move here would be a drop-off, but is this enough of an attraction to pull it this way? This tells me that there might be some more room down to 555 to get this, and as it gets a little lower, maybe a little less of a draw. What we can also put on is the open interest of the puts. Little spike here, down to 550, 545. This is all information that's just being overlaid on top of what we already found out. The put volume right here at 558, above where we are right now. This could act like a resistance and support. That's what I found in my using. Now keep in mind, this is the way that I use QTA. You can use QTA very differently. I'm just giving you pointers on where I found luck in. And when you're first getting started, Vicky, I think this was going to be geared to you. You just come down, you start at the dashboard, and you stop from the top. Bryant designed QTA specifically in this way. This is the checklist that you could do when you first start, when you're first onboarding. This is where you want to get started and just go down the list, right? How do you install the scripts? You can copy and paste in Thinkorswim or TradingView, and then you get a little, familiar with the weekly script, the intraday script, and then you introduce yourself in Discord, and then you learn about the gex, which we're talking about here today, and there's little videos along the way that you can click on. Brian has prepared this like reading instructions on how to put together some IKEA furniture. So a lot easier, a lot easier. And when you get through all this, then you can come in to the community, or you can, in the middle of it, the community, you want to start in the quant chat. The gold chat is for overall generic discussion on markets. The quant chat is more specific to the quantitative systems that we were talking about. These charts right here, the gex charts we saw, we shared, the N1, the P1 levels. This is all on theory and how to use the quant charts. Here's Brian. Here you go. Good old break and retest, right? You can't beat it. If it ain't broke, don't fix it, right? This is the most valuable strategy that I found, especially, like I always knew it, but now that I'm using the quant trading app system, it's just so much, it's just clear as day, right? There was something you always look for and coveted, but now it's so much easier to say, okay, we break that level, we come back and test it, because these are unlocking those, the hidden levels, right? I call them the hidden market levels. Bryant calls them the X-ray specs to see these levels. These aren't available on technical charts, these math levels, right? So this is where you can come and test your skills and post, what are you, I'm thinking we're going to probably see a move up to 558. What do you guys think on that? You can post that in here. And everyone can share how they used the system as well. And this is one of the benefits that I found of the QTA tools. The community is just so straightforward and so helpful and so nice. And if you have any issues or problems, you can simply DM me right here. Click here. I'm available most of the time. I leave it open. Click there and click message right there. If you get a message from me, you don't think it's me, click here and message me back. Hey, Doc, did you just message me? And I'll figure it out. There are some imposters. There are people that are trying to scam you. Bryant never will DM you. He will never DM you. We don't even DM. We have a private room that we speak in specifically for these security reasons. So this is just an area in how to welcome, to get welcome and familiarized with the system. And now let's get back to our potential SPY trade, right? That 558, was it 558? Let's double check. Right here. I'll go back in time. That's the old volume chart. We'll get into that in a second. Oh man, I'm so happy to be working inside in the air conditioning today. It is brutal outside. So we go to uncheck all. I'm going to try something different. I'm going to try just today's 0DTE, just today's information. You can find that also under handy dandy gamma exposure tools right here. This is a running feed of what we're going to be looking at under advanced GEX. Every 15 minutes, you get another snapshot of that day's expiration under 0DTE. For the weekly expiration is the weekly, the daily is this one. So this is today's expiration, expiring July 17th. We'll open it up and view it. So we can see here we passed the point of highest liquidity, which was 558. We moved past what this wasn't really a put wall, I would call it. It's more of it's a small mound, so it's kind of like easing through it. But to get into this lull, 554, and then into this would be a bit of support. So if all those other ones, the 556, the 555 break, we have the 553 of a put volume wall. That's how I look at this data. If we wanted to get more specific on this, we come over to the advanced GEX. We already have this pulled up. And now we have all this. And now let's see, I wanted to find out what the absolute GEX values look like. So this is not a spike either. This is probably why we're freely traveling in between this area. It's not a spike. If it had been more of a spike, it'd be a more directed, more of laser-focused high liquidity. Here, it's just like a blob. We got calls and puts all around here. All the sentiment is really all around here. This also goes down to 555. It drops off from there. This is telling me, it's making a case that there's no interest right now below 55. This changes throughout the day, this absolute GEX value. Right? And now let's see, we'll take this off. We'll put on put OI. It's higher than we are now. The 555 is the next one, and then below that 552. This doesn't really tell us much. So now let's test where the higher theory comes in, right? This is today, no action going to the high point. So we're not thinking that we're going to get this bounce, this miraculous bounce up to go higher today. Call volume right here at the absolute GEX, highest absolute GEX value at 560, leading right up into that, like a call, I would say a call barrier almost, because after that we start to drop off and we ramp up into it. So 560 call volume, we'll remember that. And now the call open interest, all the way up here at 565. That makes sense. It's the first big, or the first noticeable positive GEX. So it doesn't look like today would be a good day to do that theory of bouncing into it. Let's check just tomorrow's. Let's focus. Let's separate the data, and we'll just look at just tomorrow's. A little better on the positive end, but look at this, 551, this big area down here. We'll check the absolute GEX. This is a tertiary level, right? This is the first, the second, and then the tertiary here. That lines up, though. So that's kind of concerning. I would want to look at this to see if this starts increasing as the day goes on, and if people's sentiment for tomorrow is increasing to the downside, or if it's dwindling. It's 122 right now. I'm going to watch this into the day, into the close, to see what we do for tomorrow. And then just Friday, what we saw already, but since we're here, we get it, and we'll play with a little background noise there. It's background data, it's not noise. I shouldn't call it noise. So here we are. Fridays, everyone thinks that 562 is a potential. And let's see where they got that from. Around the 15-minute, that's good. So they might be thinking the same thing we were in the beginning. This is support, support, support. And once we touch here, 562 is an attraction. 562 would be right around here. So they're going to yesterday's low as an area. I'll mark that off as the weekly. And I'll make this orange and dashed just so I can determine between the two. This is the weekly target on the GEX. Right? Does everyone see that? This is a high liquidity area, and I'm gonna go out on a limb and say if I turn on this absolute GEX, this area should be somewhat of importance. So the high spike is right here, but this high liquidity, we might see a slope down, but this should be something. And if it's not, I'm gonna keep my eye on it to see if this absolute GEX fills this spot. So let's turn it on and see. So it's not that slope, but it is a significant spike, which is even a little different. If I shut this off, So it's competing for the second highest level. This is of interest in the Absolute Gex universe, right? So I'll be watching this to see if this spike grows and becomes the primary one, and then we'll have confluence. Confluence, by definition, is, think of two rivers coming into one. That's what confluence is, and that's like the basis of what we look for in the quant trading app community, is just confluent levels. We have this level here. We're looking for confluence to back it up. It's like making a case. You're a detective on a case. You find a bloody fingerprint at someone's home. Does that mean they committed a murder, or did they cut themselves, chopping up some cheese and wine? You know what I mean? So you have to get more information to back up your theory, right? We just can't go around saying, all right, we're going to 562 because it's high liquidity. We need more confluence. We need more data, right? So this is all in limbo right now, or in the waiting game for me, right? Many people could say, you know what, I'm comfortable enough looking at this that I just moved. I'm looking at this 555, we said, right? 556 and 555. We're looking at that for potential support. Once that support hits, that's good enough for me. I can take it from there. Other people might be looking for more confluence. They might want to see, I want to know, have more confidence in my trades. And that's what I say a lot about QTA. QTA makes good traders great and great traders just more confident. And that's really the name of the game. You want to have more confidence in your trades. Instead of, I see this a lot and I cringe. So I just bought 50 contracts puts on SPY for 554. I hope it goes down there. Ugh. It's like, why? Why are we hoping? You have access to a community. You have access to tools, Gex, quant charts, technical analysis from other people. We shouldn't be in the hoping business, right? If you want to gamble, that's great. I love going to Atlantic City, 3-card poker, Texas Hold'em, roulette, whatever the case is. I like that. But I don't like to invest that way. You'll see me post lottos, especially on Fridays. Let's say, here's a lotto, $20 for potential $250 or $500. That's a lotto. That's a little fun. But when we're daily investing and placing trades to grow profits, we want to have more confidence. And that's really what it comes down to, more confidence, right? And I got a message here. I'm going to drag this over and see how we can help. So let's look at this a little on the smaller chart and see if we're trying to find a base right here. Okay, Vicky, I was hoping to get an alert on what option to buy, daily or 3 times weekly. So what the difference between quant trading app and a lot of apps that you come into is I used to work for a company, it was a major company, if I said the name, you'd know it, but people would come in the morning and be like, hey, what's the Iron Condor for the day? What's the play for the day? And you can post that and you can go along your way. If that's all you're, that's what we're looking for, there's such a disconnect between them. Someone's play is not going to be exactly have the same results as yours. So when someone posts that $300% gains, 500% gains, there's a disconnect that someone trying to shadow that trade will never get. What we're doing in Quant Trading app is trying to empower everyone to make these trades yourself. If you're looking for trade ideas, those are available in, let's say, we can get into option spreads, right? If you're into spreads, Option Spreads is a channel that is talked about heavily for short-term trading, broken butterfly, iron condors, things like that. If you're looking for actual alerts, especially on the SPX, hold tight, because right now it's in the beta stage, is the SPX trade engine. What this does is exactly what you're looking for. This is a program that is still in the learning phase, right? So we're not publicly announcing, trade setups, but you can see here, as it's learning, just like a new QTA member, it'll post exactly what you're looking for. It'll let you know that what it is. It's an Iron Condor, morning Iron Condor, the estimated margin you need, the risk versus the reward, your estimated time in the strategy, just under 3 hours, and where you put your stop loss, exact figures on what you may be looking for. So when this is ready to go, this is going to be a game changer. and it lays it all out for you, where the targets are, where the levels, where it's looking at. So it explains what it's thinking. It's just not a random in the dark or blind shot. This is calculated, and it's learning, and this is a great time to learn. There's a lot going on in the market, and then this is actually a very low volatile market, but in the beginning of the year there was some volatility. So it's still in the learning phase. We'll just leave it at that. And if that's what you're looking for, Vicky, that would be good, and that's going to be on the SPX for now. That's what it's focusing on. But as far as creating or finding opportunities, these are the tools to find it. You want to find those levels that are going to be support, and that okay, maybe not today, but I'll come back and check tomorrow on it, because it's day trading. It's not everyday trading. You understand? So it's not something that we have to put money down every day. We can sit back and say, you know what, I don't like the way it looks today. I'll come back and look at it tomorrow. Or you can, if you're a big player, you can start building a position. I like to build a position if I'm getting into something that's a little more longer term. So if I really believe that this 555 is a support, I'll start building a position, a positive position into it. As you build into it, you start getting the best average, and as you round up, you're in that play already. I'm not going to do that in this case. This is a Friday expiration. I'm just going to be probably playing to the end of the week, and I took off the rest of the afternoon just to do this session. I posted it that we're going to go to 2 o'clock. I'm having we may go a little longer, just depending on what we can discuss and what's going on. But I hope that answers your question, Vicky, and I hope that you were typing it to me, because I don't know if you're... Vicky, are you on this broadcast right now? Maybe that'd be the best way to do it. Or did you just randomly send me a message and it just happened to be while I was broadcasting? But this is the way, getting back to what we were saying, this is the way that we find plays, right? Clearly, there's a line here. Is it going to hold or is it going to break? That's the actionable, that's the play. That's the play of the level. Is it going to bounce and we go up, or is it going to break, we see a retest, and we go further down? Right? Another way we have a bounce where you don't get a higher bounce. We don't make a new higher high. We start working on this level, pummeling it, pounding it away until it finally breaks. There's too many options and too much riding on this one particular level to comfortably say, you know what, we're going to see SPY go down into the 540s through next week. Or we're going to see SPY go to the higher level come next week. On a more broader scope, you can do more more speculation, right? There are discussions, especially in the option spreads room. They speculate a couple weeks to a couple months out. When we're talking about intraday trading or intra-week trading, a few days swing trading, I like to get in at a really good entry point. I don't like to say, all right, we're going to pop from here, I'll just get in. I want to see confluence that says that level is that. Does that make sense? Someone's typing something on my other room here. So if anyone has any questions of what I just went over, type them in chat right now. The chat should be open. If it's not, just hit subscribe and you'll be able to chat. Let me know what you're thinking. I see there's a few people in here. Just let me know what you're thinking and we can address it. Let me know what you're watching. Are you into Tesla and NVDA today? We can pop that open. We can look at possibilities on that. I love to trade on NVIDIA and Tesla. I like to cover SPY just because that's a main draw that everyone likes to trade, but I mainly trade the equities. I like to do NVIDIA, Meta, Tesla. Long term, I'm starting a position on Viesco, Victoria's Secret. Apple is one of those, of just like Google and Meta. These are the part of the top 7, Magnificent 7. I don't like that term, but from experience, it probably won't be very long till they find a new moniker to call it. But in the meantime, that's fine. So this is going to be something to watch on the SPY. And you know what? Let's just dive into it since I'm not hearing back anyone from NVIDIA or Tesla. We rode NVIDIA up to the 130s. We were posting about it in, I think, public chat. I don't think it was even on the pay side. I know for a fact there was an enthusiast. There was a lot. I posted a lot about NVIDIA's rise into the 130s, right? We just the same thing we just talked about, levels to levels. Explained the right here. This was the was this on Tesla? Yeah, this was Tesla. This was showing that the divergence right here on Tesla, and this was at 229. I think it went up to 260 or 250. So this was way back then. Same thing we were just talking about. I post charts. You can, here's the confluence of support. You can then apply that. These are some of the wins, just the gains, demonstrations. It was half demonstration of out of the money calls and at the money calls and the difference between them. And just this is what we do. So if you take some time and you get into it and really open up what's available to you, there's a lot to gain from it, right? And if you need help along the way, just reach out. I do one-on-ones. We could set something up. I do a 4-class. We can do, I think the most I've ever done was like a 10-class at once, but I like to make sure that you like it at first. We could set something up and see what you want to get into. Is it just overall options strategy? Do you want to know exactly how options work? Or maybe you just get the hang of it, but maybe you're a little fuzzy. We can look at that. This is the discussion to have outside of it. But for the meantime, if you do understand options and you have a working knowledge of it, you can apply these tools right away. If you need some catch-up, I can help you out with that. So NVIDIA, too, is finding a bit of support right at this other level. This was a support back 115 back in the 24th. So now we're going to be revisiting that. Or we might hold it off here. But this VWAP that we're under looks to be a bit of strong. You see how it's hugging it? Hugging this 5 line. And now we're on the bottom of it. If this holds as resistance, we could see that 115 be tested. When that's tested, we'll know. Either we'll see a bounce higher, or it might lollygag around here, kind of consolidate a little for a break lower. We'll have to see. But that's all it is. It's wait and see. It's not guessing. It's not hoping. It's not, I got $500 just burning a hole in my bank account right now. Let's just put it on here and hope for the best. No. We wait until we see something clear. To me right now, it's not so clear. It's not clear that this is going to hold as resistance, although it really looks like it might. This has been support. We broke it. Come back and retest it to a move a little lower. The RSI is really deep in the 20s right now. We're on the 2 hour. What does the day say? Day has more room to go down. On the daily, this looks a little interesting. 107. Where did that go? Like right there. Shut everything off. So then we just kind of look at it. We go high, right? We're consolidating sideways, and we have a support right here on 118. This is the main, that's interest, right? And we turn all these back on. And we'll clean this up a little bit. See the gap right there. That looks a little cleaner, right? We don't need this anymore. It broke out of that pattern. So now we get a little better of a picture, right? Let's look into this. 118 could be support on NVIDIA. Is it treating it? Kind of. Why is it really that far away? It can't be on the same screen as... See, that's a little disturbing to me, right? So, we have this information. Are we at support? Let's check, right? First, we'll go to the quant chart. What was that number again? 1-800. Okay, 118, or more specifically 117.50 and 115. So say 115 and then 117, 118 area. On the quant chart, we are below 2 sigma, right? We are below the 2 sigma line. just so you understand, everything that happens within the 2 sigma is about just over 90% of the action. Anything outside of that is less than like 9%. So it can happen, as it's happening right now, but it's rare. And the next week, every week, these 2 sigma lines change. So the next week, these 2 lines will be different. But for right now, we are out of 2 sigma. Is it going to want to pull back up? These intraday lines will change tomorrow. And then tomorrow, if we do pop up and we have intraday lines here higher, we could see a travel up to that top 2 sigma. This is not telling me that it's found support, but it's now telling me that we are in the outlying zone, that we want to possibly come back into it. A lot of levels to get through here, right? A lot of levels. We have the VWAP, we have the intraday south. If you do think of 2 sigma as a support and resistance, we have that. We have the 2-day VWAP, we have the intraday north, we have the buy zone. You know, all these levels in between getting back into where we were before this drop off the buy zone. This is a great example, right? A great example of how we looked at the SPY. Oh, we're at the buy zone. We're going to travel up to the sell zone. Not necessarily, because we played around. We're beating on the door. Knock, 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 knock. Finally, it breaks through the door and goes down. We did not see a clear bounce. If we did see a clear bounce, you could have the play that we could see another visit to the sell zone. But since we were trapped under this 2-day VWAP, and yesterday was just a regular VWAP, we were trapped under it, we fell through. You know what? Perfect example. Let's go back and see. We could go back one day, and we can see how this action looked yesterday. Because we can see where the VWAP was, but I want to see where the 2-day VWAP was and see if that came into play. So this is today's 2-day VWAP. This is yesterday's VWAP. Yesterday's 2-day VWAP did not even come into play. It was such a bearish, beaten down day on NVIDIA, right? We tanked in the morning, and then we just did not fully recover. We stayed under the intraday south, using the buy zone as support, the intraday south as resistance. If you're a scalper, yesterday on NVIDIA was terrific. You play to the upside, intraday north. The second touch on the intraday north, you play it to the downside. The second touch on the buy zone, you play it to the intraday side. You could play this all day, 3 or 4 times. Like this was a great day to be a scalper on NVIDIA. For today, since we broke and we're not really in any type of levels, it's kind of hard to discern where the bounce will happen. So we can clearly see we're bouncing on the VWAP here, but the only other level we have is just a technical support level of 117. So if we do not break this level, it's a confluent level, right? We had the VWAP and the intraday south. The next logical revisit would be that 117. That's a technical level. And then we can zoom out and see what is below that. Right? More of a slide if we get below that level, right? Breaking this orange line, we slide right to that 115. We break that area, we slide right down to the 107s. So this is a good area to see it. Now, if we just follow the action, right? Follow the bouncing ball. We rise up, we reach resistance, we find support, we test support again, we rise up, we find a lower resistance. We're making lower lows. If I were a betting man, and I am, I would like this is kind of standing out, right? I mean, does everyone see that? We have an entry, an A, a B, a C, a D, an E, an F. So we could play this. We could say, all right, we're going to bounce back up. We might find this as resistance, this 125. Let's go with this theory, right? Let's go with the theory of 118 holding, possibly to 125. Then we put it to the test. The levels aren't really telling us much. We're down below it. Let's go to the gex. What's up, Vicky? Those charts are difficult for me to interpret. Can we go over one? For sure. I'm guessing. Oh, Amazon. Okay, I'm guessing you're listening to this broadcast, right? I'd have to solidify that. Amazon, we can definitely go over that. I just want to figure out go over this one NVIDIA thing, and then we look at Amazon. So the thinking was, refresh our memory. Thinking was, let's say, the theory, right? We're going to go for a theory and see if it sticks. 118 support, 125 as resistance. And we might even, what is that? 126. So 125 to 126. If it goes slow, it would kind of be here. Let's see, 125, 126, and then we'll get a secondary one. If the triangle comes into play, and again, this is not a definite, so it could even be longer than that, right? Or it could be shorter. We'll adjust the triangle after, but let's see, 125, 126 as a possible target. Let's see how the GEX lines up. This is the weekly, so this would be Friday's expiration. Friday's expiration is probably not going to tell us what we want, but there is, look at that. A little bit of high liquidity at 126, and there's also call volume at 125. That says that other people are looking at what we just saw. But what else is going on? We have this put volume spike and this high liquidity GEX at 115. Rings bells, right? Right now we're at that 118. This is heavy support because it's a high liquidity GEX bar and then a drop off. And there's no put volume here. There's no reason for it to go here, but there is a reason for it to go here. So 115 might be a target, okay? Before visiting this. The absolute GEX is here. You know what? Let's pull it up. Let's get a little more into it on the advanced GEX. And then we'll break down Amazon. We have every expiration, and we'll take a look at that real quick. Some high liquidity at 130, and another one, let me guess, 115? Yeah, 115! This is every expiration. We're going to cut this down to this Friday, and let's keep next Friday. How long does that pattern go into? It goes all the way into August. We want to focus on here. 725, 26 is next Friday. Yeah, let's focus on this Friday and next Friday. We got those checked. We click submit, and now it's going to generate our very own individualized, tailored GEX report. 115, our good old friend 115. 126, that's a good positive one, and this high GEX where we're on now. Let's take a look at what the absolute GEX says. Super high level at 120. Doesn't really help us for our 126 plan. Let's see. Call open interest. Boom, 130. That's the highest one. Where's the call volume? 120. And then 125 is the secondary high one. All right, we'll shut those. And we'll look at the put volume. Is there a 115? Yes, there's a 115 wall. Put volume block, spike, we'll call it, right? At 115. This is confluence right here. 115. 115 for the put volume, 115 for the GEX level. And now for attraction, the open interest is more of a attraction or sentiment, right? Does that say 115 also? It does. 115 is looking now as a target and as support. And just refresh, what does absolute GEX say? 115. That's a secondary level. So even though we're here, we passed this level. This now should start to dwindle, and we'll see if this starts to grow. We'll keep a note on that. It's about 90, 85, I would say 85, 90,000. And where was the put open interest? 120. We'll see if these numbers change. As these numbers change, you'll get more delicious looking as 115. It's a small move. It's a 3-point move on NVIDIA, but now that NVIDIA's in the hundreds instead of the thousands, it could be worthwhile. Something to look for. Now, if this is too small of a move down to 115, you can wait. You know, like it's day trading, not everyday trading. We can wait on that move to see if it holds and then play the upward. If you're kind of a little antsy and you don't want to wait, then you could try to play. Let's get right at 115. $0.03, close enough, right? And we'll just double check to see if technical lines up. Boom, perfect, right? Look at that. Double overnight touch, and then from that, we went sky. Zoom. This to me tells me, yes, this is strong support. Because we came in it hot. We came in real hot. We came screaming down, found the base, and came flying back up. That is a bounce. This tells me this is going to should be strong support. Is it still strong support? We won't know until we reach it. So we could reach that 115 overnight. Anyone who's wanting to get into that 115 play, I would say maybe not. Consider not getting into it. This might have been enough. This might have been close enough for NVIDIA to say, you know what? We got all those orders. We're good to go. See ya later. And tomorrow we can open up higher. Or we can open up and this could touch overnight. Because remember, the last time it touched, it was overnight. Right? Similar situation. Came into it. We were underneath the VWAP. We bounced off the VWAP below overnight. Touched it overnight. And that was sufficient. We opened up, gapped up tomorrow. This could be something we see tomorrow. That support works overnight. Sometimes supports don't work overnight because the volumes are way, way lower. And it almost feels like cheating. So they kind of like skip over that little line and then let the market take care of it tomorrow. The VWAP looks like good resistance. This looks like good support. How I would play this would be hands off until tomorrow. If we come in, we have a bounce here, and we start opening tomorrow above the VWAP, I would say 125 is a good position to go. So again, if we hold 115, 125 is good on NVIDIA. Not for Friday. I would go next Friday. All right, this is all hypothetical. This is all entertainment. This is all for, what do you call it? Paper trading, right? That's all we're talking about is paper trading here. You handle your own money. We're all adults here. You handle your own funds. This is what I'm considering doing. Next Friday, 125 target. I would probably go to 124 call. Just to show you what that looks like. So about $7 for 124. No, these are puts. I'm like, wait, that doesn't sound right. $7. 124, $2, right. $2, give or take some pennies. These are delayed quotes. $2. If you're looking to get maybe a vertical spread, if you're new, I don't really like to do spreads, but someone asked me about it, you like it, you can play around with that. But the idea is the target is 125. However you like to trade a bullish trade, you can incorporate that into your trade plan. Don't put any money down. Just see how it works. If this is a new strategy for you, that's exactly what you should do. You know, trying to see if it works. If a play works, you don't have money on it, it's not a loss, right? If you're new to something, you put money on something and you lose it, that's a hard loss. We are not in the business of losing, right? We're not in this to make money either. We are in this to save money. This is the whole idea. We need to beat putting money in the bank account, right? We can put our money in the savings account and earn that, you know, whatever that percentage is now. It's abysmal, right? We want to beat that. So if we're not beating the bank, the savings account, we're doing ourselves a disservice. So our first goal is to save money. Our second goal is to grow wealth, gain profits. So try this out on paper. Take a small trade, 124 for next Friday. If that 115 holds, if this 115 breaks on NVIDIA, we're going to see a lot lower of a program. The fact that this action might happen overnight is what will deter me from placing a trade today, because this support has not been tested yet. Right? So the sad news is that we might not get a test during the day. It may happen overnight, and we'll have to react tomorrow. We also may get a break overnight, If that happens, it will probably come back and retest it tomorrow, and we could play to the downside. So this actionable level of 115 is something that we wait to play. If we break it, we come back, we retest it to play to the downside of 107. If it holds, great. We could play it to 125 or 124. And keep in mind that 125 is just an area of gex and a technical area for, I think, filling a gap. Let's see how that goes. Right? Yeah, it fills that gap. And everyone might be looking at the 125. That's what it is. Everyone's looking at 125. That's why we want to go 124. So it gets in. We're able to get in, get our highest profit, because that's where theta is the most, right? When it's right around at the money. We get in when theta is low, and we get out right as the price action passes us. We gain that theta as the price action is going past us, as our out of the money becomes at the money, and then in the money, that's when we cash out. And that's my favorite play to do. We start with an out of the money call. We let it become at the money, and then cash out when it's in the money. When we get that passing by. I was going to say drive by. It is a drive by. It says as it drives by the target, that's where we get the most juice. That's where we get the heaviest squeeze when it's at the money. And that has to do with theta and other secondary Greeks, and we can get into that in another episode. But for now, all intents and purposes, we're waiting for 115 to see 125. Savvy? Let's see, Vicky. Are you in the broadcast? All right, I'm going to assume you are. You know what? I'm going to give you the link because we're recording today. I usually don't record these, but Amazon. Do I have it in here? Yes. Let's see where we are. Start a macro view. Okay, Amazon might have some issues going on. See, it looks like it took a big dive. Like, oh, we should be going up, right? But look at the RSI is only at 42. It's got room to go down more. The MACD is still in bullish territory. It hasn't even come to the zero barrier yet. That's still got room to do. The vortex indicator, they're about to cross right now. And if they do cross the yellow above the blue, or the gold above the blue, that would signal a bearish event. Everything is hinged on this level, 185, right? So, now we have that. Let's pull up the quant. We start levels, and then we move into the gex, which is more like sentiment. So 125, I said? What was the level below it? 125, what are you talking about? 185. Oh, 185.25, that's what I saw. So 185, below that is 180, and above that is just, if we get a bounce here, we can bounce all the way up to 193. I want to get it. Let's just leave it 193, right? This is the actionable level. We have support here. This is a little bit of a dance around here. We're going to be at 185, a break of that either to 180 or a hold of that to 193. So now we look at what the quant levels say, and we're on today's date. Yes, we are at 2 sigma. We are at 2 sigma. Now, does this look familiar? Right? Didn't we just see this on NVIDIA, right? We had come down, we developed a descending triangle using the VWAP and another that was, I think, the buy zone on NVIDIA. Now we're using the 2 sigma. I don't normally look at 2 sigma as a support or a resistance line, but it does happen, right? So why ignore it, right? What I'm thinking is going on is that it's working on this support level, right? And that goes back to what I was saying, that Amazon has more gas in the bearish tank, right? We have not made a new low on the RSI. We are still in the 40s. We can go down to the 30s, and look at this. It went down to, what is this number? 36. And we're higher price, but we're not at a level of RSI. We're not coming back to this level. See this R hit this, came back and hit this, went away, came back, and we haven't hit that yet. So there's still more room on the RSI to go down a little further. So if it's not this, could be 182, could be there. Let's leave this up as the actionable level, right? This is definitely the next one to break. This level here, this level of support. We broke it, came back and retested it, right? Clear, right? Break, retest, go. It's letting us know that this is a level. It's telling us we don't have to look up anywhere else. When we look at the quant, here, it's letting us know that, yeah, this is a level of interest, 186. We don't need anything else to tell us. This is touch it once, touch it twice, touch it the third time. Hey, Ingrid. Can we look at meta, please? Just, join the stream. Oh, no, you don't, the dance music, you hear it? I need something during the day to keep me focused. Otherwise, my mind starts going everywhere. So I think that's what just to finish up Amazon, that's what I see on Amazon. Let's real quick look at the, you know what, we'll look at the, Hey, Flo. You guys, this is comfortable. I can work with this, but there's a whole chat room in the broadcast. What was I doing? Amazon, right here. So the numbers again, 189 were the levels here. So 192, 185, or 180. And on the quant levels, nothing below that, so we don't have that, but 189, right? 190 is a 2. So 189 matches up. 189 matches up with, it's probably the top of this lever right here. See, that was the last time it hit resistance. We broke over it, came back to test it, and it failed. So now it's thinking, or people are thinking, we want to retest that to see if that's a level now, because it was a level, broke it, when I retested it failed, maybe we'll revisit that. That's not really information for me to trade. I would not do anything with Amazon right now. There's too much flux. There's too much more room to possibly go down, and there's, if anything, I would say more down. It hasn't found support yet. How about that? Haven't found support yet. All right, Meta. How's everything been, Ingrid? How's everything? Good. So Meta, again, had a bad couple of a bad week or so. Is this down flush? Is this coming to an end? Well, we're finding support here. We kind of broke that support. We have a secondary support here. Let's clean up some of these lines. Let's clean up some of these lines. That's a phrase you'll hear me, or you'll want to hear me say a lot, but I probably never do. I can see past all the lines, but it makes sense. So this is sticking out to me. You don't want to get that thick. We'll just make it another color. Right? Breaking this level could send Meta down to the low 400s. Right? There's not much to grab here. Maybe you can make a case here. Can I borrow a line? I'll give it back. Appreciate you. So, macro view, a break of 452. That number, 454. Right? Always pays to double check. 454. There we go. So what are our first thoughts? First thought is 454 may hold, right? Because we broke it, retested, flew up. Now we come streaming down. There's a lot of momentum, though. It's a lot of momentum. If we don't hold this, it would be okay. It would make sense. If we broke through, came back, and retested to go further down, it would make sense because there's a lot of momentum coming down. On the other end of that coin, you can make the case, hey, listen, there's a lot of energy coming down here, a lot of energy. People may have to adjust their positions and their holdings. Why not use this level before? It's been tested. It's letting us know on both sides, right? It had trouble breaking it. Once it did, double retest and hold. So 454 would be an area to watch. And now to get into a little micro, is that a level to play? Are we far enough to wait to make a play? Let's see. I would like, if we were to play that level, I want to see another test of this VWAP. Another test of this VWAP. Then a revisit down here. I would not get into any puts right now on meta. I mean, look at the RSI. We're on the 30-minute. We're in the teens. This is frigid area, frigid cold. And as we get lower, 18, 32. All right, so this is starting to reset. So it's starting to reset. We may just be in a flush down. It's starting to reset because the price action is still looking bearish, but the RSI is climbing up. So this is a perfect example of what I said at the beginning of the stream, was that we have to be careful when we're looking at divergences that they're not actually resets for more than the same direction. So in other words, this particular, right, we have the climbing of the RSI, the valleys are getting higher, the price action is getting lower. That is textbook bullish divergence. Or you can make the case that this just might be the RSI taking a breath. And once this RSI gets higher, closer to the 50 mark, it could push the price action down more. I would watch the MACD. If the MACD stays in the bearish territory, it will solidify that case. And now let's finally see on the minute. The minute is still in the 30s, but we're making new higher highs. I mean, new higher lows. Not a higher high yet. So to sum up, if we're looking to get in by shares of Meta, I would wait to see how this support works here. There's been a lot of overextension on a lot of these big name stocks, the large caps. And if we're not in those moves already, I would be second guessing or a little trepidatious about getting in to go higher, right? I mean, historically, July and I think into August. Well, July is usually, isn't July like the least volatile, but the most profitable? Correct me if I'm wrong. I'm just going off. I know I have the chart somewhere about the seasonality, but doesn't matter that. But it doesn't mean that that's what's going to happen this time. It's not every July or every August. But what I'm saying is, like, just wait to see if this support holds. That's it. Just wait. You know, we don't have to guess right now. We want to let the stock tell us what it wants to do. And if it says, hey, listen, I like the support, I want to go this way, we'll say, okay, very good. I'm behind you on that. We'll support it. But the idea that the RSIs are really low, I mean, how much more can we go down? So it looks like 30 is a recent low for Meta, right? Has not gone below 30 in a while. So 30 being on that, the trend is your friend till it's not. If a data point is telling us we don't normally go below 30, we have to assume, all right, we shouldn't be looking to go below 30. Doesn't mean that we can't, but we shouldn't be planning on going below 30. So any type of move to the downside would not be wise for me right now. Any purchase like of a stock might have to wait to see what happens to this support. That's all I'm really saying. I'm not saying laissez-faire, hands off, but just wait to see what happens. We have time, right? Time is on your side when you're not in a position, right? There are positions that you're on the sell side where time is on your side, but when we're in the position, that's when time comes in, especially with options, because options work with price action and the time element. If you're just buying and holding, that's the probably the most proven strategy there is, dollar cost averaging. There's every week $100 into Amazon or $100 into Meta, $100 into the SPY. If you did $100 every week for the past 10 years in the SPY, you'd be well off right now. And there's cases that instead of people messing around and trying to do options or even trying to do real estate and all these other things, if they just put their money in the stock market, buy and hold and left it, they'd be well off or better off than they were right now. And that's how the market really is. And that's why, you know, Bryant is always the person that's saying, it's like, if you had to take a guess or if a direction, the market usually always goes up. And even if it does go down, it will eventually go back up to the upside. And someone like me that's looking for the bearish plays, this is not, you know, this was not a good time for me, so I played to the upside. It's just a funny little anecdote that I'm always looking down, but I'm not. I'm not really always looking down. But in this case, I might be. But we had a little bit of overextension. And you know what? This is a good example. I was talking about this the other day. Patterns, right? We can look at patterns and say, oh, yeah, that'll be textbook. But when does that ever really happen in real life? When do we ever see a perfect cup and handle? Well, there are videos you could probably go back and look that we were talking about in the beginning of 2023 that we could be possibly coming up to retest a resistance on the SPY. And when that resistance was met, we came down, we formed a handle. And we put this back on, and we could clearly see a cup and handle. Right? Cup and handle for higher. You know, any textbook would be proud to say, yeah, that's a cup and handle. Perfect. But for some reason, when it's happening live, you just don't. Your human instincts kind of top in like, oh no, we're going to be crashing down to here, and we can actually fit it up where it found support. Right here, see, cup and handle, and then where do we go? We went higher. How do we know how cup and handles work? We take the measurement of the deepest part of it to the neckline, and we take that measurement, and if we put it here. Look where we went. The measurement from here to the neckline is the explosion or the aftermath of what we're seeing here. And that's where we got this 576 line, I guess. I don't know where I drew that, but that's where it is. Actually, it's got to be because we put it on the yellow. Matches up. So we're reaching the expected move from this giant cup and handle. We have this giant move here. Does that make sense? And then if you really want to get into it, within that move, we have a flag, right? You have this run up, we have a flag down, and let's see. This pole matches that pole. So there's the definition of saying when you get into a pattern, if you measure the entrance move, that should be the expected move when the pattern is complete. So we have a pole going up, we have a flag, we find support, and then we have an explosion up. This was that move. Just from those simple textbook images, the cup and handle and a bull flag pole continuation could have made these plays. Now here's another one. We have this flag or this pole running upward. And that's the expected move from that flag, right? Will that happen? We have to wait and see. But this would be 3 perfect textbook moves in a row. You know, what are the odds of that happening? I don't know. But this is what we do. This is how we use different data points to kind of determine whether something will or will not happen. We can use this and then look into whether or not there are anything in the way. Is there sentiment that says there's more sentiment to the downside? Is there levels that we can't really get through up here? This is where we overlay what we were just talking about, the quantitative levels and the GEX levels. This will tell us what there is. Let's go back to see if my makeshift chat room is the public chat area today. What's up, Flo? How much is it? Well, we can determine that. It's usually for 4 classes, and we can talk about that in private. I just wanted to focus on really how to use the tools today, but I'd definitely be open to doing something one-on-one. Let's see. Where can we go next? Just reading here about something. Tech giant becomes more of a... So there's a lot of talk in tech right now. Okay, great. Everyone writes articles on everything right now, so I don't really take articles to heart, but what I do is I just create like a data point on it. So some people are saying that most tech is overextended right now, which is, it kind of makes sense, because it does look a little overextended. But does that mean that overextension can't continue? Not really, right? It can continue until it doesn't. So we're not going to play the downside until we start seeing a downside, right? I like to say it's not time to worry. Don't worry until it's time to worry. What can we pull up? I think Tesla was in a move right now. Let's see what Tesla looks like. Tesla reached 260s, 270. So here's Tesla. Tesla is a great example of how to play two sigmas. It's very volatile. It's very momentous, or there's a lot of FOMO in it, right? Once it starts moving in a direction, people try to gain that or jump on that direction. So you can see once it chooses a direction, it tends to stay that way until it runs out of gas. Case in point, what happened this month, or the end of June into July, right? Tesla. This talk about textbook patterns. This pattern that we were looking at, the inverted head and shoulders, and it's right here, right? That's an inverted head and shoulders, right? You have the shoulder, neckline, head, neckline, shoulder, break the neckline to go higher. It's not pretty, but it is a shoulder, head, shoulder explosion. On top of that pattern, we have a secondary pattern. That other pattern was the ascending triangle with the pole being bullish before it. That broke out. Those two patterns together gave us Tesla's explosion, which seemed to be every day. Tesla went up another 20, 15, 25 points. And where did it end? It ended at a technical level that we had drawn out, which was the previous high, which was part of the trend, this little trend that we were going down forever. We played the downside, we played the up, we played the down. Then we got caught. We tried to play the upside here, but it stopped at that gap, came back down. I'm trying to play the upside until I just gave up. I said, no thanks. And then this explosion here. This took us breaking of that pattern. Now the next move would be to make sure that this is actually a true break of that pattern, is to hold a new higher low. That new higher low, we can look back, is right here. This little, what seemed to be innocuous at the time, it's letting us know, like, listen, we broke this level. I want to go back and test it. You make note of that. Any break and retest is the stock price or the stock action telling you that there's a level there. So we'll make this, I think we'll make it red, because now this is going to be our support. 241. Came down, hit it. I think we broke it overnight. Yeah. See, we hit it during the day, overnight, broke it, and the very next day did not like that it broke it. Remember I was talking about earlier how sometimes support levels are broken after hours because there's less volume, and then the next day it leaves it up for the market to fix it or accept it. In this case, it did not accept it. We went right back over that level, and we haven't revisited it since. This line was not drawn recently. This was drawn after hitting this level here. This was just a speculative a speculative line, just in a demonstration. Like, this is where we could go. This is not a target line or anything like that. This is just, we spike up, we can come back down and start finding support here. If we find support anywhere along this line and create a new higher low, that will be grounds for letting us know that Tesla wants to look higher. But usually after every big move like this, we want to see some consolidation. People taking profit, people getting into a position, finding that consolidation. And it all comes down to whether or not this level holds, right? We could make the case that this is a nice level of support. But since that was reached overnight and not accepted, I'm going to leave this one as well. So we can have two. We can have two levels of support. If this one breaks, we have this one. But this one is the first one to conquer. If this one holds, this looks good. If this one breaks, this one looks good. And that's all it is. It's just actionable levels. We'll come back tomorrow. We'll come back Friday. Friday, if this if this pattern plays out perfectly, on Friday we should be here. And on Monday we'll see a break above or below. That is a true coin flip Friday right there. You could say, you know what? I like, they say that there's a 235 put. It's in my wheelhouse of being a lotto. Maybe it's $40, maybe it's $50. But if it does happen, it'll pay off bigly. I'll take that. The other option is if we have a breakout, we could see a breakout to the 255, 256 area. The same thing. If that lotto is in your wheelhouse, you could take that play. But until this level tells me something, I'm off of it. I'm thinking maybe to play Friday for this level. Because if this does break tomorrow or by Friday, that would be good. Let's follow that down. Friday, 242, right? It's a couple days away, so it shouldn't be that much. I'll switch to puts. 242, $3. Something to consider. It's not something. It's a little out of my wheelhouse for a lotto for sure. But is it really a lotto? Let's find out. So 242 is a target. We'll see what happens on the quant. Remember, these are weekly levels. These are the daily levels, the intraday. So we have what? Max Pain is telling us at 220. Okay, that's an attractant as well as I use it more of a support and resistance. And we have the buy level at 237. We just want to look for 242. So if we have the buy level down at 237, 242 is looking okay. This is telling me that let's see, what was that? The 245? Is that ringing any bells? 245 is right there. I may now take a lotto for something a little lower. What's the 237? That's probably a lot cheaper. 237 put 180, and that's right at the top. Like $2, 150, $2 would be the cap of what I would do for a lotto. You know, I don't like to gamble. That's not really a lotto anymore because we have information telling us that that's a possibility. So now let's keep this in mind. 237.50. Now let's switch. We'll first take a look at the gamma exposure on here. What do we got? Tesla is telling us absolute. It's at 250. We've passed that. 240 is a big level, and it's a spike, put spike here, and a spike in the high gex. It's blue, so navy blue is instead of the bright red. This means that the overall net gex is positive. If this has been red, these bars red, that means the overall is net negative, which means all that really means is negative. Net negative means more volatility. So now that we're saying it's less volatility, there's more of a smooth move. There's no reason for the back and forth. So down to 240 looks pretty good. We are past this high put volume spike, and now we're into the negative gex. There's a little bit of a gap here. You know what? Let's get some more information. Let's pull up the advanced gex. And this is all it is. This is all you do with the data points. You start looking at one area, be it technical analysis, and then you overlay the quant. And then once you see that, you start overlaying the gex. And you go back and forth. That's what detectives do, right? You go to a crime scene, you find a bloody fingerprint, you take that, you make a little note in your detective notepad, and you make a comment, probably a really cool one, and then you move on. But then you revisit that. You say, well, now, wait a minute. Was that bloody fingerprint on the left thumb or the right thumb? Let's go back to it. You revisit the crime scene. You take a look at it again. So here we have that gex. This is, by the way, I used 2 weeks, this Friday and next Friday. I'm going to adjust this in a minute. I want to start with a little more of a macro view. 240, that's a high target. Now, remember, this is net negative gex. This is different information. We're using 2 weeks, and it's more updated data using the live advanced gex. I'm going to throw on the absolute gex. This is the high point now, which the line tells us. But look at this. The secondary line is at 240. So now, 240 is starting to make a little more sense, right, guys? So we're seeing, we have all this positive gex here, but we haven't found any like tangible support yet. Where is that support? That put volume? We passed the biggest one, right? We're below that put volume support, but now, look, 240 again. So we have the put volume. We have the absolute GEX secondary. We have the highest negative GEX. And now we have the put volume here. Let's see. Anyone want to make a bet on where the put open interest is? I'm going to say 240 and another one down at 230. How about that? Place your bets. No more bets. Hey, what do we got? 240 is the highest put open interest. So now 240 is just checking off those boxes. 240 is looking pretty prime for some action. And then the put volume. Oh, I'm sorry. I hit the put volume is the put open interest. Sorry, let's go back. Put open interest. Hey, what do you know? Put open interest is also 240. And look where the secondary one is. Secondary is at 230. So 240 is checking off all the boxes, even though if I use the wrong box at the wrong time. Put volume, put open interest, and absolute GEX. Absolute GEX, remember, is the secondary one. It's not the highest one. So now we can go in and we're going to take off next Friday. Now we're going to just have this Friday. We're going to click submit. So this is a blank chart. Which one do we guys want to start with first? We'll start with the absolute GEX. Always a good place to start. We know where the first one is, the primary, 250. That's where it gave us the line. Secondary, 240. So remember, this is this Friday. We removed next Friday. There's going to be more swayed data because more people are on this Friday than next one. So the absolute GEX, 240. Right? We're going to shut this off because that's an overpowering data point. And let's start backwards. Let's do the call open interest. There's always going to be call open. It's 275. Great. No problem. Is the call volume in play here at all? No, 260. Right. We knew that from the technical chart. Let's start with put volume. Put volume. Anyone think 240? Is this where the spike should be? Right? This is the highest amount of GEX and the second highest for absolute GEX, right? Is it the second highest? Yes. So the put volume should be here, and I think there was another one up here that we just passed at 250. Let's see. Boom! We passed the 250 one, and the secondary one is 240. As Tesla starts moving lower, this could change to higher, or this could change to lower, but it should be changing to higher. As the price moves in that direction, 240 is a nice psychological number. I'm going to get 240 puts. It just rolls off the tongue, right? So 240 lines up there. How about put open interest? Anyone want to place your bets? Point to the screen. Point to the screen. I'm going to say here, and this is looking like a little open interest. This would only be good for Confluence. That's why I'm guessing the two biggest ones. But I want it to be here. I want it to be here to give us Confluence. Now, remember last time I clicked that by accident. Clicked upon open interest. Boom. 240 with a secondary down at 230. This is really good information because now we have two pulls into this direction, right? That's the only way. That's the way I look at it. Open interest is like an attraction. It's numbers that are on the books that need to be handled. That's where the market makers would love if the price action went there, so other people would take this off their books, right? They don't have to hedge it using other means. That's just all just, mapped out in theory in my head. That's the way I like to explain it to myself, that this is an attraction, that put open interest. And remember, 240 is the secondary absolute GEX. We're going to watch this. Now, I may be thinking, let's move along from the watch phase into the application phase. So now we want to see, are we at a good entry point, right? So let's just review on, so the 242, I might want to stick with that. 240 is closer to my wheelhouse, July 19th. Let's say we get the 240, all right? Because there is a chance that Tesla breaks this line and goes further. So I don't need to get the 242 as using 240 as a hard stop. And let's just review where that put volume was. See, this is why I shut off the absolute GEX. If you're using advanced GEX, absolute GEX is the highest number out of all this data point, out of all these data points. So if you're putting on and you're taking off and you don't see anything, it's because the absolute GEX is on. When we shut this off, all the other numbers come up, right? So where's that put volume again? 240. That's going to be a hard support. But like I said, as Tesla moves down, these values can change. As these put volumes increase and decrease, so will these and so will other values. So we got to watch it. But I'm going to go with exactly 240 because I do feel like if there is a move towards it, more action will happen. And I think, so the reason why I would get 242 instead of 240 is for case in point what we saw in NVIDIA, right? A revisit to that support line, right? We touched it perfectly here, but now there's revisit to the support line. It's kind of letting us know that, hey, we might not need to go all the way down. So in this case, a 115 put would not have gotten that at the money or that pure, that in the money flavor. You know, it would have left just before satisfaction, right? In this case with Tesla, I think we will touch 240. And because we will touch it, we look left, we have this nice bar. There's no real support, technical support at 240. This was the previous one, but now we brushed through that. We've broken through that. So I'm leaning a little more towards this being the support. I'm going to leave this here just because we talked about it so much. Good. So this is why I'm going to get 240. And if we really want to go lotto, we can go lower 230. So let's see. I like to get two positions. So I'll get, say, the 240 and then maybe a 232. So it'll be a total of about 300. And we have one further out of the money and one that would be at the money or in the money if this move happens. The more I'm thinking about it, the more I might just lean to go for a full lotto down to here. And then if we do see the move happening, I can add the closer at the money later. So here's my thinking. This is the way I do the strategy. Out the money is obviously less expensive, less risk, but there's better exponential gains if that big move happens. In order to gain the most value from something, you want to be the price action, you want it to be at the money. You want your strike, the price action, to go past it. In other words, if we got this strike, 242, and the price action, as it's going past this point, we become from out of the money to at the money to now in the money. This will make the most gains as the price is passing it. And once the price passes it, I can kill this. I can close this, collect my profits. And the price does not have to travel all its way because I closed this already. What will then increase my chances and the likelihood of me closing this trade is that I have the lower put in place. So there's a lot of times, and I think Jason, he might be in this right now. He's always, P-Man. There's always, I always like to get to, because I know the way I trade. And this was a conversation I had with Jason, was that sometimes I hold on to positions longer than I should. So once I know we pass this, I'm like, okay, I should close it now. But what if we just keep going? I want to hold this and make more gains. I don't want to close this position yet. It's profitable. I think it's going to be more profitable. And I'll hold on, and then it'll come back, and it will leave all those gains. With this strategy, I can close this, and then knowing I'll have another position down here to collect the gains. So you're getting the best of both worlds. You're scratching both itches. One is the human itch, or the human desire to hold on and make the most money possible. And like, oh, I think we're going to go lower. I think we're going to go lower. But when the data says, you know what, this makes sense to hear. A computer would take profit with no feelings about it, no emotions. The humans, we have to try and outsmart ourselves. And that's really what I'm doing. I'm outsmarting myself. I know how I trade. I would like to hold on when I see momentum. Now I don't have to. If I get this 242 put and this 232 put, I didn't actually look that up yet or solidify that, but I can close this once this makes money, leave this on to make the more money, and it's less risk, right? Because look, the 232.5 was 80 cents, and this was, did this just change, updated that fast? Or was I looking at I'm sorry, yeah, 240. So this was 208, now it's down to $2. So close the higher risk one, take that money off the table. It's now paid for the entire move plus profit. And we can leave these on to your heart's content. Normally, we try to get 1 and 2, or maybe 1 and 3, or 2 and 3, things like that. You want to get less volume or less quantity of the ones that are more expensive and the more volatile. Since these are going to be at the money first, these are going to change up in fast pricing. So it's like as we cross this barrier, the gains and losses are much faster. Does that make sense? We can break this down in a session. We can do a dedicated session to that. But I don't want to harp on this too much. But that's the idea. We find the strategy, we find the levels on the technical analysis side, and or with the quant side, and then compare the two. Where do we find levels? We see 237, and then 230 was another one, right? 232. That was the technical support level. The buy zone is 237. So we can see that 237 is reachable, and we look left. Technical says, oh yeah, if this level is broken here, what we're at now, this is an easy slide right down. So this is saying us that it's available to go down once this level is broken. 240, let's say 240, 245.85. Let's get it really right on the money. 245.70, whatever the case is. I've said that like 5 times today. Whatever the case is. Whatever the case is. I don't like saying that. I apologize. And getting back to, if we just traded on the gets, 240. 240 with a secondary target of 230. Now, this is just this week. A smarter move would be playing this into next week, because there's only 2 days left of this week. Again, I'm a little bit of a lotto using this week, and let's see, do we actually want to break this down? Let's do it quick. I'm not going to explain it all. I just want to look at it. I'll just highlight next week's and see if those levels have anything. Okay, there's a lot more positive when we highlight just next week. And I'll just cycle through this to put open interest. Is that still down here? Oh gosh, that's a lot. So people are looking, or you know what? Here's a little secret on Tesla. Tesla will always be hinged on 200. It seems like forever. If we're below 200, it's a target for higher. If we're above 200, it's a target to revisit. It's always 200. Is there absolute gex around there? Very little, but so I would not even use this as a data point. But we're looking here, 230 and 240. 240 first, 230 second. Put volume, 230, the highest one. So this can go into next week. Put volume here as a resistance, and let's see where the call volume is. The first call volume is at 260. Well, I said the first one's at 250, but the first one of significance is at 260. The highest one's already at 300. Again, the same thing goes for 300 as it does for 200. Everyone will always be looking for 300. When we're below it, we get above it, they're going to be looking for 300 to revisit. So this is an outlier. I don't use this as a target. Now watch, next week, bam, 300 Tesla goes to. Let's see. So what did we say, 240 and 230? Yeah. And put volume 230. So then we can adjust. We can go into a more of a calendar play. We can get a close one here and a further one out. I like to, if we're doing an actionable level, so now I'm zooming out, and this kind of looks, if this holds, this looks like it could be higher. So if we're going to break it, we should break it by the end of this week. If it doesn't break by the end of this week, it's going to be a decision for next week. If we do hold and we get a bounce, break this level, next week we'll see higher. But let's stick to this plan right here. We're going to play, I'm just going to leave it now as a lotto to 235. And I think that will fit in my wheelhouse for lottos. 235. A buck. Perfect. Right? Right? I'm playing this. I'm new to this strategy. I'm not really comfortable on anything. I'm just going to paper trade it. Right? I'm just going to paper trade this strategy and see what works. Technically, it matches up that 235. 235 is potential with support at 231. So 235 would become at the money and then in the money. That works. We're waiting on this level to break, so you can wait. You can wait to see if this level breaks, and then let's just revisit the quant one more time here. The quant, we're below the 2-day, we're below the VWAP, we're below the intraday, and we're actually below the midpoint. Let's get a refresher. These charts do not refresh on their own. They stay static for data collection purposes, for archival purposes, really. So we're below the midpoint. We're beating on the door of this support. And I think if we break overnight, we could wake up to a nice profit tomorrow. If we hold overnight, hold this level, and we got it here, this is going to be our resistance here. So it's not like we have a nice stop loss, really. That's what I'm trying to say. We have a nice stop loss. It's kind of close, and it's kind of proven, right? Let's make it. I don't want to have. I'm not trying to catch the overnights. I want to catch just the dailies. I mean, during the markets, right? I forgot that this is a speculative line. All right, let's just draw a whimsical trend line till Friday. I'm playing the break. I'm not playing the target of here. You could do that. You could play this target here. I'm just worried that we could bounce here and then open up tomorrow here, and then we only have a coin flip for if we bust out at here Friday or break below. I'm going to get in early, play that we break below, but I'm not going to play the break with a strong position. I'm not going to play the break with an expensive position. I'm going to play the break with an inexpensive position. So I'm basing this, again, on this is not hoping. This is more than a lotto. I know I keep referring to it as lotto, but it's more than a lotto. We've looked at this information, and there's a strong play to the downside. How's the absolute look again? Right. We're now right here. This is spot price. 240. That's the pull. So 240 is the higher potential than 230. But then again, if we put open interest, right? 230, 230, and the put volume, 240. So a 240 looks like a good support. I'm playing the break of that. It's not really the play to do. The 240 would be the play. I hope that makes sense. I know I kind of talked about it and came back to revisit it. And let's see if... So, Vicky, just to answer your question, I usually do 4 classes for about $500. It works out to like 5 hours plus access questions throughout the time we're doing the classes. We can do once a week, twice a week. Whatever the case, reach out to me. You can message me here, or you can email me at doc@oneononestocks.com, and we can go over it and discuss what your needs are. See if it's something that I can help you out with. The other thing I want to touch on is one more thing is how... Oh, we already covered that. I forgot. Yeah, we covered that already. So this is the idea. We look at technical analysis. We start to see if there's a play, and if there is one, we back it up with the data to see if that happens. This 240, I'm kind of thinking now that this is a bit stronger than I'm giving it credit. A bit stronger than I'm giving it credit. Yeah. I'm looking backwards here. So this is more, the smarter move would be to play a 2, let's say that to play the put this week as a lotto, and then play the hold for next week as a bounce. So if it does break, I'm covered. It pays for this one. If it holds and bounces up into next week, I'm covered that way. Does that make sense? So if we get a put somewhere down here, or just playing the break this week, and then we get a call for next week up, what is next week? The 26th. Two potentials. If it breaks, we got it covered. If it holds, we got it covered. This is an example of what to do. This is not a play that I'm publishing out there, but some people were asking specifically on how to play it. And how does this match up? We looked at the GEX next week, right? You remember what we saw? We saw a lot of more positive GEX up there, but we also saw another goals down there. So this is all comes down to what happens tomorrow, really. If this breaks tomorrow, we come back in down here, we could see a retest of this, revisit down here next week, and we can kill this. If it does break, we can kill this tomorrow, and we won't have that much loss, because one, this is out of the money. The theta is not paying attention to this that much. It's not closer to out the money, so it won't be such of a loss. That's one thing. The second thing is that it's it's very fur out of the money, so it's less expensive than at the money. There's a lot of theories, like especially the place I came from. The thinking was always play, you can go out of the money, but play close to at the money. Play close to it, and you'll see more gains. It's true, but you also see more losses. And if you don't play them correctly, your losses will outdo your gains. It's just guessing 50-50, but on the more expensive side. And this way, you can kind of play both sides, but have less risk. So again, if this holds into Friday, this looks good. If this breaks before Friday, this is profitable. And we can kill that. Just an idea. I think what I might do is just, because I really don't have more time to go over and think of a specific plan, but that's the idea. Thinking another strategy, if you know more specific, would just be playing the 240 for this week. This looks like it will revisit. The only thing I'm thinking of is if it revisits it overnight and bounces up. That's the only case. 240 should be revisited this week. Whether it happens overnight and we get a bounce off of it, or if it happens during the day where you can close it. Because remember, options only are traded from the market open to market close, 9:30 to 4 p.m. So you can sit here, you can watch your target being met, and you can't close it. And then in the morning, you wake up and it's above where you bought it at. That's how options, you can get killed on options because of that. If you're playing swings into the close of an expiration, into a Friday expiration, you're at the mercy of the overnight. More so than if you were to play 2 or 3 weeks out. So a safer bet, that's what we should cover. A safer bet, right? To go 2 or 3 weeks out. This would be the bet. If this target holds, you play this couple weeks or 3 weeks out into the beginning of August. If this breaks, you can just slide this theory all the way out to that way. Play it into next week. Should do it. All right? That's the safer. This is the less closer to day trading, more like swing trading, investing. When this line holds, we look here. This line breaks, we look here. Simple as that. So that is the slower version of what we were just talking about. I'm trying to pile all this into this Friday's expiration to make a little bit of a less expensive trade. When you're first getting into it, it's a little hard to put that much money up. And keep in mind, you're putting more risk up by getting a further out expiration, but it's moving a lot less slower. It's you're not gonna, if this does break and you have this position, you're not going to get killed on it. You might lose a little bit, but you're able to cash out and gain it. So you might be losing $40, $50 instead of the 500 that it's up there. On the other side of that, if you got an at the money for this week, you might be paying close to $500, but you can lose that if it does bounce and go the other way, because expiration is the very next day. See that difference? The further out you play, the less movement or less volatile these prices are. So in other words, we look at a 10-point move. From 245, we move down 10 points, 235 is $1.10. That's almost cutting your position in thirds. If we go 2 weeks out, let's make a real difference. Go August 9th. 10-point move. 10-point move, 245 to 235. you're spending $14.50 and you go down to $10, you lose a third. So it's a third of your investment instead of 1/3 of your investment, right? So in other words, this should have been, say, $5, but now it's 10. You see, this is just a rudimentary. But you can do this yourself. Just look at the options table and see how they react. On the other side of that, if you go out of the money, it moves even less. A 10-point move from 235 to 225 is 10 from 4. That's just over half. Let's go to another one. Let's try 230 to 220. So from 8, you lose 3 down to 5. So that's like just under a third. But if you go here, 235 to 225. 235 is 115. 225 is 35. That's more than a third. It's almost like 1, 2, 3, like a fourth, I would say. Close to. Right? So just play around, and that's how options really work when you're dealing with at the money, out of the money, and time. All right. I'm sorry if I I rambled around the bush there for a little bit. Oh, Vicky, you're very welcome. This is very weird that I'm using the public chat as the chat room for live. But hey, whatever works, right? It's really good. Ingrid's in the house. How are you? Oh. Always remember to stretch, too, guys. Always get up, walk around, hydrate, drink water. You got to keep your physical body in tune as well as your mental. And I don't want to get all preachy on you, but take breaks. Take breaks every hour. Get up, walk around for 5-10 minutes. It helps out a lot. So I can see easily tomorrow being one of two things on Tesla. We hit here and we go lower, or we hit this overnight and go visit higher here. This will be the funnel into a decision either on Friday or over the weekend. Because if we zoom out, we come to a point right on the Friday. And it's a pattern. I mean, something has to happen. We're not going to be at this point and just trade along this line, right? We're going to bounce, 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 bounce until one of these breaks. Either this moving, this decreasing resistance, or this steady support. One of these has to break. Which one? That's what we're looking for. And this is like that seagull pattern we were talking about. It comes up to a point. You have the beak and then another wing here. So it's almost like a wing. We still can't really figure out how this is an actionable pattern, right? It's not like an inverted head and shoulders, and it's not a head and shoulders, but it's a wing, a beak, and a wing. Do we go higher? Do we go lower? I don't know. The jury's still out on that one, but it's something we're looking at. Private group, not really anything related here. So, any other questions? What's going on in people's minds? I know, Vicky, you're brand new. Just get to the getting started. This is the old vol chart. We'll cover that another time. But just getting started, you click on here, you go through the checklist one by one, and you get all set up. You want to set your scripts. You can set them to Thinkorswim or the TradingView. You just go here. There's a quick installation guide. It tells you step by step. Click the studies button. And the next slide will show you the next step by step. And then you'll have these quant levels on your Thinkorswim or on your TradingView. Just like that. I want to thank you guys for coming, by the way. Make sure, please do me a favor, hit the like button, hit the subscribe, or hit the bell if you want to hear when we do this again. I don't do this all the time, but when we do, I'd like to get notified. And any questions you have along the way, find me out. Seek me out, whatever. I'm usually in public chat, enthusiast chat. These are public areas, right? If you're new to QTA, oh, by the way, if you are new and if you're on the fence, go to quanttradingapp.com. Use the code DNOW30. It'll give you 30% off your first month. It's like a thank you for coming to this demonstration, and you can get started. Make sure it's absolutely something for you. And plus, make sure you come to these workshops, right? We're going to have these every week. I do these every week, but I want to add more of a supplemental one, maybe on top of it. It's important that you get used to using these tools. You get screen time with them. You know, it's like driving a car. You know, you don't, now we can just get in a car and go, but at that one point, you got behind a car, you might have been a little nervous. You know, you have to get comfortable with something for it to be of any real solid returns for you. And along the way, if there's any questions, the community's here. Super awesome community. You can check out Quant Chat or Gold Chat. People post a lot of their own theories in Gold Chat. BK Brown's amazing. She has her own system that she always posts, and that just adds another layer of confluence to things, right? And you can use the community for your benefit. You can post, hey, I'm looking at this. What do you guys think? Post that, and there'll be someone jumping all over you to say something. But if you need more help, reach out to me. I do one-on-ones, usually in a 4 or 5 class session, and we'll figure out what you need and get you all set up. You need a working knowledge of options. You really do need a working knowledge of options in order to successfully use the QTA, because that's what it's all based on. What we looked at today, the GEX information, it's all based on the options chain. The quantitative part of it is not. This is cold hard math, has nothing to do with the option chains, and that's what makes it so great, is because you can use that as another set of eyes. Someone else, it's like doing a math problem and then sliding it to someone next to you and say, hey, can you check that for me? Sure, no problem. This is another set to find confluence, right? The GEX is more for sentiment and options chain. The technical analysis is what we see on how I am looking at where the support and resistance lines are. It's just based on where we've been. These levels with the quant levels, then adding the sentiment of the GEX levels on top of that, it creates such a feedback loop of confidence that you can easily say, you know what? I don't like anything we looked at here today on Tesla. I do not think 240 is going to be revisited, even though I have all this data saying 240, 240, 240, 240. I just don't feel comfortable. That's great. I would rather someone be a little more uncomfortable to enter a trade than overconfident in entering a trade. This helps those traders that have seemed to have found a lag in confidence or a lull in confidence. This should replace it. So if we're looking at this technical chart, I can easily say, okay, 240 is a technical chart, a technical level that we should reach. Let's say that 240 was right here. I could say that, okay, we want to go down and find the lull before we broke that level and came back over it. It wants to retest it. That makes sense, 240. But then, to add confidence of saying, okay, options chain says, yeah, 240. 240 is the level, for sure. And then, to see a quant level, I'm saying, yeah, 237 is a level of support. And there's nothing in between there. That just adds more happiness to my 240 level, right? So you're adding confidence to a trade. Will I have probably made that 240 trade anyway? Yeah, I may have. But now I'd be more confident of making it. You see the difference? That's why I say QTA turns good traders great and makes great traders more confident. And that's what we really need. We just need confidence. I was going to say in this day and age, but I cannot stand when people say that. Because when was there ever a time where people did not say in this day and age, right? It's always been in this day and age. So why is it now super different than 10 years ago? Anyway, but I really do want to thank you guys for coming out. And thank you for hitting the like and subscribe button. I'm going to start working on more structured content. So I'm going to do like a video on RSI and MACD. And then do a video on how to find levels. And then we'll have that as a library and maybe give access to that. But I really want everyone coming in to QTA to have a working knowledge of options and a working knowledge of levels. And then when you apply the quant levels to it, it will just make that much more sense. Savvy? Savvy. We're approaching 3 o'clock. This has been a nice 2-hour workshop. I'm not complaining about being 2 hours. I could really talk about this all night, and I know Bryant is the same way. And I just really enjoy it. So if you have any questions, reach out to me. We need to do a one-on-one. You can hit me up in the messages or find me at doc@oneononestocks.com, or we can do it that way. Anything you want. But I really just want to stress that this is a place to create independence, that you are able to look at a chart when you're done learning how options and levels work and done learning how QTA work. You'll be able to look at a chart and say, I see this is an actionable level. We're going to wait to see if it bounces to visit here, or if it breaks to visit here. Beyond that is another type of trading. Further out, we do on the day chart, we can look at further out levels. But talking specifically about one or day trading or swing trade or just intra-weekly trading, this is what we've been focusing on. So if you're into more swing trading a month out, this is not that it's not for you. This just wasn't what's covered today. If you're more into scalping, you just take what we talked about and hyper-focus it. We get into the daily, we see the levels, and we trade within them. At the beginning of this, I said something like yesterday was an amazing day for NVIDIA. Using the quant levels would have been perfect day for it. And just to rehash, just using the quant charts alone, yesterday for NVIDIA was a great day for scalping. Because we were trapped between the VWAP and the buy zone, or the buy line. Of course it's going to take a little extra time to do it. It was my last one to look at, right? So of course it's going to freeze up. Here we go. And there we go. So this is the 17th. I'm going to go back one more day. So just to refresh, if you're into scalping or intraday trading, this would have been a day for it, right? We dumped in the morning. We held on the buy side. You could have got calls up to level to level, right? We hit one level, level to level. Double top on the intraday, get puts to the buy side. Double bottom on the buy side, get calls to the upside. Double top on the upside, and now we were here, right? 126. So a double top on the upside. What should be following that? A move downward, right? So if we got puts after winning all day, we could have got one lottery put to hold overnight for the downside. Now my computer is getting overworked. The last thing, here we go. So remember that double top, double bottom goes up, double top goes down, down. That would have been a very good overnight hold in the money. Right? And we're not really talking about NVIDIA right now because we're in the 2 sigma zone, and it's a little hard to speculate. But the Tesla one, that was a very good one. I like that. So guys, thank you so much for coming. And this is like the 4th time I'm going to wrap it up. I always tend to do that. But hit like, hit subscribe. Remember to use the code DNOW30. Go to quanttradingapp.com. Use the code DNOW30. It gives you 30% off your first month, and you'll have access to everything in the gold side. You have all of these gamma exposures. You'll have the quant chart chat room, the gold chat room, the option spreads room, and you can get access to the beta version of the SPX trade engine. And we're not covering that really in the seminar or any type of the workshops or any webinars either, because it's still in beta. But once that's solid, once it's a proven machine, it's going to be a game changer. All right, guys. Well, thanks a lot, and I will see you guys around the rooms.